Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. So tonight's live Forex market review. So with that in mind, we'll get into reading through the disclaimer, please. If you're on our YouTube channel, I can't see the chat if you're watching the live stream, but you're more than welcome to watch, or you could just use the link that I've given you and join us in the webinar, and then I can see any questions that you might want to ask. So you're welcome to join us. For everybody else, if you've got any questions as we're moving along, just put them into the chat or the question and answer box. All right, let's move along. If you don't know me, then my name's Duncan Cooper. I'm a Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time trader. I've traded the Forex market now for 15 years. Managing clients more than 10. If you want to contact me about the webinars, simply shoot me an email to duncan.cooper@acy.com. And you can connect me in the week in various places at our website, acy.com, market news tab, YouTube channel, ACY Securities Australia. And you can connect with me on Twitter and LinkedIn as well. You can connect with me in our Telegram channel through the week. If you want to get access to that, just contact Nathan Bray. I'll put his details in the chat a little bit later, so you can contact Nathan. Anything to do with Telegram, if you want to set up my chart layouts on your MT4, then contact him. And if you've got any questions about your trading account or opening a trading account, any questions on that, he's the man to go to. All right, so with that in mind, let's just get into it. We'll just go and have a look at what news events are coming out for the day. So I like to use forexfactory.com. So we do have 10:30 p.m. tonight. These are New South Wales time, GDP for Canada, and 11 p.m. Governor Orr speaking from New Zealand. And then into Friday, 10:30 p.m. tomorrow, we've got the US Core PCE Price Index. So we do have some members of the Fed talking, but they're not red calendar events, but they could obviously say something that might drive the market. But other than that, that's the news events for the week. Of course, yesterday, the Bank of England came out and said they're going to start to buy, I think their term, bonds in the UK called gilts, I think. But in any event, they're coming out to buy bonds to keep the interest rates down, I believe, is the correct expression. And that obviously added some volatility or more volatility to the market. And it definitely meant that the S&P 500 in the New York session went up. So what the market might be starting to expect, or maybe there's an expectation, I don't know, is that when things start to get a little bit too volatile, prices of currencies are getting too low, like we've been seeing on the pound. If I bring up the pound while I'm talking, here's a daily look. Even though they're raising interest rates, it's like they're raising interest rates on one hand, but now they're starting to buy bonds, which is kind of quantitative easing. They're quantitative easing and raising interest rates at the same time to stem the flow of the currency price moving down. It's like, wow. And they're trying to stop inflation, but now they're buying bonds, so isn't that printing money? And you're just adding fuel to the fire. I don't know. So in any event, well, there was a lot of volatility. Let's just drop down to the 4-hour chart. We actually spiked up at the end of last night's webinar, and then we traded down, and we've been moving back up. And through New York, all currencies versus the US dollar look very positive, and to the yen, and the stock markets are up. So I might just start with the dollar index. And you can see yesterday's day, big negative day, although it's not changed the trend, but a big outside day. All right. Are we going to see a pullback to 111.31, which is a broken monthly level of resistance that we moved through? So, you know, are we going to get a short-term top here for a bit of a pullback? You can monitor the dollar index to see its form. What we are seeing in the opposite direction is on the S&P 500 at this significant monthly low. We have put in a fresh low for the overall move down. It was either yesterday or the day before. However, when we get to the day chart, this monthly level here, where it was yesterday. Yesterday, the day before, we put fresh lows in. However, we had this fresh low and then an outside candle reversing back up. So the question is, are we putting in a short-term bottom to maybe move up? Or are we putting in a longer-term bottom for a larger move up? I did a video analysis on this today. You know, is this a significant low? Is the market starting to think, okay, all these interest rate rises are getting too extreme for, you know, prices of currencies and economies? And are we going to see, you know, those being wound back, or it's at least putting maybe a bit of pause on the US dollar strength? Slide is saying that the dollar index found support at the old level from way back at 112.86. So 112.86. Or on my monthly chart, I don't have a 112.86. Is that a weekly level? So I don't know where you're getting your 112.86 from, but I will take your word for it. It'll be helpful if I don't know if here we go. It'd be helpful if I was in the right area on the chart, wouldn't it? All right, I don't know where you're getting your 112.86 from there, Slav. Weekly, 23rd of April, 2000. Somewhere back here. For me, whilst these levels could work, this movement down here for me kind of hides all that. It's not to say that some of these levels over this side couldn't work, but when I'm looking at support and resistance, if I get a big aggressive move down here that's covered all that area, especially if it's a long time ago, I tend to use just what's in this area here. All right. So that's how I do it when I'm looking at, but I'll take your word that it could have touched and held at a level from over here. At the moment, though, what I would be focusing on primarily on the dollar index is the bigger levels, just the monthly levels. Could be that level that you're talking about, 112.86. There you go, that level there. All right. See that level there, Slav? For me, all this price action is really starting to hide that. It's not to say that level couldn't do something. I'd be more inclined to say use that level than this level. The ones that were last broken rather than being hidden by a lot of price action. All right, that's the way I look at it. All right. In any event, yesterday doesn't change the trend on the dollar index, but you know, over the next week, do we start to see a sell-off? Leave me, I see your comment coming in. It all depends, and you want to know the exact question. However, sometimes the questions are a bit long, so I'll do my best to reiterate what the question is, but depending on what the question is, sometimes the questions are a little bit long. All right, let's move along. All right, so we've got one nasty day. Is that going to lead to a few more nasty days? All right, we'll see. And the opposite with the S&P 500, one very good day up. Is that going to lead to further movements up? All right, so bear those two instruments in mind. One's potentially going down at the moment, one's potentially going up. So they're in sync, but opposite correlation. All right, so I just want to have a look at my 15-minute charts to see what's going on. And what we're probably seeing, if you've been monitoring your charts, some supports coming in at the central pivot points at the moment on the pairs that moved up yesterday. So I just want to see if there's anything imminent. I might start with the Aussie, yeah, and just work to the right hand side, because there's things are already starting to move up, but on the Aussie yen, you go to your day chart, we folks broke this level of day support at 93.06, and we've pulled back to the 79% of this major run up. Okay, is this where price is finding support for now the longer term move up? We've obviously had that positive day yesterday in the market. Is that where the lows come in for the Aussie yen for a longer term move up? Today, intraday, we've pulled back almost back to 93.06. All right. And when you get to the 4-hour chart, I'll take the fib off now because we've just seen where it was. But we have moved up to a new high just. And we've been pulling back approximately to the 50% level, but we found support just ahead of 93.06. So are we getting support just ahead of 9300 for a move back up today? So what you're going to see on the 15-minute chart is we've dipped below the central pivot, we're back above it. This is starting to look like we've maybe putting in the low of the day here for a move up. You know, you can start to see we're getting a trend line break to the upside. Are we now going to be moving up to challenge 94 and a break above 94? If we can break above 94 today, so if you like that entry, obviously you can take it. There's a MACD cross trend line break. My first target, I put this in the Telegram today, would be at a significant level of resistance up here at 95.73. All right, Barry, you're saying H dollar S on 4-hour. What does that mean? Oh, head and shoulders. All right. Let's go back to the 4-hour. So, yep, I see what you're saying. Possibly this is the left shoulder, an inverse head, and this could be where the right shoulders come in. So maybe, yeah, it's all, you know, where this support formed here. This is kind of a false break. Stops going off below support. We zoom back up, and quite possibly, yes, that could be the right shoulder. Yeah, well spotted. I don't really look at them unless we're at the 62 or the 79, but yeah, I get what you're saying there. So yes, there's a definite structure format maybe forming here. We've also got positive divergence on the 4-hour chart as well. So you just need to make a decision. Do you want to look to maybe trade this long? It's given, you know, a trigger there to go long at the moment. So you just need to make a decision. All right, Aussie dollar. All right, to the daily. My platform's a bit slow. So we have a nice outside candle yesterday. The lines on my chart are daily lines of support from way back. If you go back in time, you'll find them there, up from the COVID low. So we've been breaking through some daily levels of support, but we've got some support at 6402, 6400 level, and we pretty much traded up to 6500 level just above, and then we're kind of sitting in the middle. Structurally though, the 4-hour chart has turned to up. So are we having a dip intraday here? It's almost pulled to the 62, not quite. Are we moving up today? It is getting back above the central pivot. Looking a bit similar structure-wise to the Aussie yen. All right, there's your trend line break, MACD cross. We're moving, closing back above the central pivot. Is this now moving up for the day? Is that the low of the day? You just need to make a decision for yourself. Cameron is saying it's expecting last week's low. Which pair? Aussie dollar? Or you mean the Aussie yen? Last week's low here? Yeah. Yeah, I noticed that last week's low. We've dipped below and then we're holding there today. So see how we were sitting on last week's low? Who was asking me? Barry, you were saying about the head and shoulders. We were getting support on last week's low here, maybe for that left shoulder. We dropped through last week's low. Sell stops going off. And we moved back above last week's low, and we're kind of getting support at last week's low today. All right. Yep. Well spotted. All right. So Aussie dollar is the low of the day coming in here to move back up to test the high where we were yesterday. There's always the possibility on the Aussie here because long term we're very negative. Difference between the Aussie yen and the Aussie dollar is the Aussie dollar is coming up from a fresh low, whereas the Aussie yen is coming up from within the range. So if I go back to the day chart on the Aussie yen, this isn't a fresh low in a long-term move. This is just a low that's high to this low over here that I drew my fib on. Whereas on the Aussie dollar, clearly this is a fresh low for this whole move down. So the structures are, it's a little bit different. So what we might see, and you need to be aware of, is we have moved back below 65 today. So if we do continue up in any movement today, watch 65 because 65 could hold. Because we have moved back below 65 and we tested it here to move down to this low. So there is the possibility that 65 is holding, but you just need to make a decision. Do you think after yesterday's very positive day up, we're going to put in another positive day today? You have to make a decision. Do you want to trade it or not? But if you do watch 65 as resistance. Euro yen. Now this had a very positive day like the Aussie yen. And this is the same low on the Aussie yen up to the same high that I was using on the Aussie yen. We've kind of got support here at 62 of that range. Got support here in this area of consolidation that was before we moved up. So really we just come back from the point of where this moved up. So very bullish candle yesterday. We've just traded back to the highs of these two candles here, which are these 4-hour tops here. You can see a clear rejection on those 4-hour tops. And on my other charts, what you'll notice is that in the same area, we've been trying to move below and then move back above last month's high here. So that's offering a little bit of support as well. It doesn't want to stay underneath last month's high. So over here, we broke above last month's high. And maybe last month's high is now starting to offer some support today. But, on the 4-hour chart there, it's putting in there's a 4-hour entry there, the 4-hour candle entry, there it is. This is putting in a higher bottom here. That candle is forming support. All right, so we could have well put in the intraday low there for a candle up, and we may well be moving up. So back to my other charts. Getting supports, nice support at the central pivot point. Is that the low of the day now to move up? Of course, you can't go back in time to get a better entry price, but trend line break there, MACD cross, getting above, starting to move above 140. Are we now moving up? So, it looks bullish. This broken level here of support, which ties in with that top, that to me, if I was getting long on this pair, would be my short-term target, 142.31. If you can move through there, we could well be obviously coming up longer term to retest the high that we came from. But at the moment, starting to look a bit bullish. Do we get follow through from yesterday? That's the question on these pairs, all right? So All these pairs are looking very similar. So, you know, you need to decide, do you want to trade that reversal of yesterday to the upside? And of course, you can't trade everything. I would probably just trade one, because if they all start to, if one reverses today, they're probably all going to reverse back down the other way. So there's still that thing about, is it just a one-day correction, or are we putting in, you know, a bit of a bottom? All right, euro dollar. Now, showing the same corrective candle, you know, I would be looking for a possibility of this moving back up to this area of old support. Primarily the weekly level of support from back in time at 99.04 and this weekly level of old support at 99.52. All right. There is this low here, 98.64, but yes, it could just stop there, but I'd use the higher time frame level more as a guide to where it could pull back to if it pulls back. So the question is, because these two levels here, which are at 97.08, and we can get my 97.08 and 96.91. These are old levels of weekly support from back in time. So the market's obviously moved below those levels. It's deliberating as to whether it wants to move back above those levels. All right. So out of the pairs I'm reviewing this evening, this is less favorable because you've got this resistance, broken support in the way of this moving up today. So it's a little bit harder for the pair to move up because it's negotiating now possible resistance. So it's had a 50% pullback of the move up. On the 4-hour structure, you got positive divergence. And like the other pairs, it's dipped below the central pivot, but it's moved back above. And there's your trend line break. So all these pairs have been showing through the London session and move up back to positivity on the 15-minute chart. You can see here that there's the headache to move up and through 96.91 and 97.08. So that's less desirable as a pair to trade today because of that area of resistance, but we could obviously move through. All right, getting into the very highly volatile pairs of the pound crosses. Now, this weekly level of support or resistance, back to support now, is being support today. So this could be this move down here could have been a complete false break at that level. And we could be moving all the way back up to this weekly level of old support, 159.44, or we could be moving all the way back up to the top. So can't go back to that level of support now, but obviously in hindsight today, that could have been the point down there where my mouse is right there. That could be the point where you should have been looking maybe to go along if you had the nerve to trade this pair at the moment. 156.07 and 155.59 are two weekly levels of support that were broken on that move down. Are they now offering support to move back up? 4-hour structure is going to be showing that we're starting to put in a higher bottom, higher top, higher bottom. If you know what the 4-hour candle entry is, well, we've had one there today. Break of that candle on that candle, stop below the low. Price is moving up. Simple entry. Cameron, you're saying it's also respecting last week's low. Yep, so it's doing a similar thing as the Aussie yen. Where's my last week's low? There's last week's low here. So we actually didn't get down to last week's low, so obviously it's respecting it. It's really respecting the weekly level of support. So yesterday we moved back above. You can see it here on the 15 where it started to offer support, last week's low. See here, it was resistance at last week's low. Became support there and we couldn't get down there today. So that's looking rather bullish at the moment. I'm not trading the pound crosses at the moment because I don't want the Bank of England to come out and say something else. But just from an analysis perspective, that's looking rather bullish. Moving back above these broken levels. All right. So is it going to break above yesterday's high and move higher? Really, if you were going to get long on that pair today, you probably should have done it already, but structurally, it's just starting to put in, maybe a reversal. It's looking exceptionally, maybe starting to look bullish on the 4-hour here. The only hurdle is that's Monday's high. Of course, for this to continue up, so if you did take the 4-hour entry and gotten long, you really need to watch the high of yesterday and the high of Monday, because obviously the high of Monday held here to move down to there. So if we can't move above the high of Monday, we could be holding there and then moving straight back down. So if you're trading that pound yen, be aware of that. All right, pound dollar. We might be getting a reversal back up to just working out in my head. I don't know where 12073 comes from, so I'm going to take that off. That must be a 4-hour level. Just what there were, it's gone, just waiting for it to delete. All right, so the major levels, well, we've obviously false broke the low, all-time low at 104.63. And the next level of resistance is up here at daily resistance 113.50, okay? Can we move back up to there? Now, if we got back up to this area, I'd be looking to structure an opportunity to trade down. So even though if we do move up, I think long-term, the movement's still down, but we might be in a bit of a corrective phase from that big drop down. So, excuse me, moving to the 4-hour chart, I would say the same comments. Yesterday's high and Monday's high here is going to be the struggle for this to move further up. It's giving you a 4-hour entry. Don't know if anybody's been starting to trade the 4-hour entries. All right. So there's a 4-hour entry there, though. If you wanted to execute it earlier, break of the red candle high, stop below the low. There's the entry. Got a higher top. Cautious approach would be at yesterday's high and Monday's high, okay? We are starting to form some bullish structure there on the 4-hour chart. Cameron, you're saying I've done one. Oh, all right, you've done one 4-hour entry so far. All right, I'm seeing a few today. Obviously, the pound yen, the pound dollar is setting up. Of course, very cautionary on those pairs, but they have set up in that fashion. All right, and we are getting support here today at central pivots. Of course, you've probably missed the best entry. All right, we can't go back in time. But as I said on Tuesday, if we started to get a reversal on all these pairs that have been selling down for quite a while, what I want to start to see is intraday structure-wise, is price just pulling back now to the central pivot point and getting support? And we're seeing that on a number of pairs today, that we've opened up into the new day above the central pivot point. And the central pivot point is offering some kind of support. So we're definitely having a rally. How long the rally will last for, but we're definitely seeing intraday price structure now forming where it's opening up for the new day, the new day with the pivot point start here. So price is above the central pivot point, it moves down to it to get support, and then it moves up. All right. So at the moment, intraday structurally up, longer term, it's still structurally down. Is the 4-hour uptrend and the 50-minute structure that we're seeing to the upside going to hold for, a recovery maybe all the way up to 113.50? We'll have to wait and see. New Zealand yen. Now this line here is a level of monthly support, 81.55. If you want to know where it is, so this level just here. All right, and we, this downward move that we've had could just be a false break of this weekly support level. See that we closed above it. We have been back below it today, but a very positive candle there. We could well be moving up. It's got the next headache if we start to move up and you want to trade this pair is this level of resistance, 82.96. If we move up and close above that level, there's every chance then we're moving all the way back up to the top of the range. All right. So this kind of area, I've got weekly support that was there, weekly support low there. You know, if we close above this area, so get back above, yeah, there's every chance then we're moving all the way back up to where we came from. All right. All right, let's move my line now, 82.964. All right, my platform is getting a bit slow. All right, so the 4-hour structure, you've got MACD divergence, gone to a higher top. Doesn't even look like it's pulled back to the 50% level of a fib if I drew it in there. But what we're going to see on the 50-minute chart is getting support, the central pivot point to move up. All the pairs are looking exactly the same, aren't they? All right, you need to pick which pair do you want to trade to the upside at the moment. I would just be trading one, just in case, you know, this reversal that we're seeing isn't going to hold. At least then you don't have a multiple pairs open that are going to not work for you. All right, New Zealand dollar. Now, of course, we're going to the monthly chart here, getting short of this COVID low, just short. So selling pressure could be coming in. The market's going to know that low's there. Weekly trend, day trends down. All right. As I've been saying, it's very much overextended. We could obviously move back up to, this is broken weekly support from a long time ago. I would look more to this level here, 60.47, weekly broken support. If we get a long-term correction, I'll be looking up that maybe for price to move back up to that kind of area. We'll have to wait and see whether this one-day reversal yesterday is going to manifest itself into, you know, a two or 3 week correction. All right, so not quite divergence there on the 4-hour, but obviously we moved up to a higher top. So this is potentially looking to put in a higher bottom. You know, it could get a deeper dip down to this level to put in maybe a right shoulder. So left shoulder here, the head inverse pulling down to there. So whether or not it's already put the low in for the day, you could obviously monitor down there at 62 that lines up with the left shoulder there and see whether it does get that deeper pullback. On the 15-minute chart, like the other pairs, it's getting support at the central pivot point at the moment. All right. So on all these pairs at the moment that have broken back above the central pivot point, you just need to work out what pair do you want to trade. You know, maybe they'll dip back down close to the central pivot point so you can take a better entry. Or maybe they've already started to move up. Pound dollar, would it be okay to take a buy off the break of that descending trend line, but with a resistance just a little above? What time frame are you looking at? 15. Well, what you obviously on the 4-hour chart, you got that. There's a bit of a resistance here, okay, which we're fractionally above at the moment. I'd be more concerned about this level of resistance here. 109.16. yesterday's high. So in terms of resistance, I would be more concerned about that level rather than this level, because we're actually above that level at the moment. So this would be the level that I'd be concerned about. So if I was going to be trading that break of the descending trend line, I would have wanted to have maybe gotten in before where price is now, because you're halfway from the break to the resistance at the moment. All right. I mean, of course, you could trade it now, put your stop below here, but by the time you get to resistance or close to, you want to get the risk out in case it fails. Personally, I feel like it's already moved, because this 15-minute candle here, let's say you were thinking about taking it on the close of that candle, it traded back on this 15-minute candle down, and then it's moved back up. So for me, you're not getting the best price. You could have gotten a better price than where it is right now. So you have to make a decision as to where you think there's still room to get in. Key level that's in the way of a longer move today. I mean, this length of the day, let's just draw it in. Yesterday's range could obviously be put in today. And just go to the 4-hour. So yesterday's range from the current low, gets you all the way up there. So in terms of a projection of yesterday's range getting copied today, there's plenty of room to make profit if we can break above resistance. So you just need to make a decision. Whilst we're talking, it just keeps moving. So you're getting closer and closer to resistance. So if you haven't already made a decision, you're getting closer to resistance coming in towards you. I would have gotten in before now, but you have to make a decision. All right. Personally, you should have gotten in before, but you have to make a decision. Like I was saying yesterday, for those that were with us on the 100 pip stop, see how we started to move above 108? Buying at 108, stop at 107 today. All right. All right, so just cover the New Zealand, looking very similar to all the other pairs. We're having that break above the central pivot point. Is that going to now lead to a fresh high above yesterday's high? Can we put in a further move up today? Dollar Canadian, I did a video on this in the week, and maybe it is going to come to fruition. Doesn't matter if it doesn't, but left shoulder, head, right shoulder on the monthly chart here. All right, we're testing all weekly and monthly resistance. Those two lines there, 37.15 and 37.92 from over here. I'm just pausing because although for me, you're saying price action was not confirmatory to justifying entry earlier. Well, it depends what you're using for your entry on the pound. But certainly on that candle, this candle here, this big one, that was the candle where you should have been deciding, are you going to take a trade on the pound there? All right, not this one here, because it's obviously higher up. So that candle there would have been a clear break of the trend line. MACD's crossed up. All right, waiting 2 candles later, to me is just late. So that candle there definitely gave you confirmation of a move, for me anyway. I don't know what confirmation you're using. All right. All right. Back to the Canadian dollar. All right, so in the Canadian dollar, there is the potential here for a major pattern to move down. Left shoulder head, is this a right shoulder forming here? 62% fraction below your weekly and monthly resistance here. All right. So there's the weekly. Look, at the moment, we're just fraction below weekly resistance, but we have been above. And the daily, we had a very negative rejection yesterday. Just pausing again. So I'll leave me say, what I do with a trend line break is a 5 pip close above the trend line break. In the example we're looking at, it's way beyond 5 pips, but it's closed above the trend line. And if you're trying to make a decision as to whether you want to buy that pair today, the first candle that did close above the trend line was the candle where you should have made a decision. My general rule is I like to see a break above, a close above a broken trend line by 5 pips. In the example that we're looking at, it's way more than 5 pips. So for me, I like to get in around about 5 pips above the broken trend line on the close. Whereas in the candle you're talking about, it's probably, let's just go back to it. It's probably 30 pips above here. 35 pips, it closed above the break of the candle. I like to get in when the candle closes five pips above the break. So because of the volatility, it's not doing that because it's giving you very large candles. But that was the candle to confirm. But for me, yes, the close is way beyond the break of the trend line. So even getting in on the close of that candle was a long way up the chart, but waiting for another 2 candles to move another maybe 40 pips up the chart is way too long. But yeah, my rule is price closes 5 pips above the break of the trend line. That's my entry rule. All right, but it closed 35 pips above there. So still moving up as we're talking. All right, back to the Canadian dollar Canadian. So we're having a hefty reversal on the day chart at monthly, weekly resistance. Today, we're retracing back up to retest the area. On the 4-hour, structure's down. We're having about a 62% retracement at the moment. There we can see it. So for those of you that might look for a long-term move on this pair to the downside, you need to make a decision. Do you want to trade it? It's already starting to move below the weekly resistance level as it retested weekly resistance today for retest and failure. Cameron, I know you sent me an email saying you structured a trade up here yesterday with a 40 pip stop, I think you said, but a 100 pip stop would have worked great, wouldn't it? All right, so there you can see we've been reclaiming back upside inside the candle yesterday, failing at 62 as I'm talking. It's dropping. There's trend line break. We've already had it. If you didn't want to sell into the weekly level of support resistance, we're clearly breaking it right now. MACD's crossed. So you just need to make a decision if you want to trade that pair. I mean, you're going to need to put your stop in a favorable position. Getting it above that high there is going to be the best part of 70 pips. So it's highly volatile. So, we did the 100 pip entry yesterday. Well, it'd be nice to have a 100 pip entry at weekly resistance. We're a bit below there at the moment. So you're kind of giving away the best part of 20 pips at the moment on your 100 pip stop. So using last night's webinar, trading here, as we're coming up to test the weekly resistance, you could have been thinking maybe that's going to hold today. After yesterday's very negative candle, you could have been trading at 37.15, stop at 38.15 for a positional play. And then you're seeing as to whether it's going to work. All right, so are we getting a major reversal there? A major weekly, monthly resistance, the high time frame, big head and shoulder pattern. And on that 100 pip entry, I know, Cameron, you're across this, but the 100 pip entry went through last night. If I can get rid of this, my platform is very laggy. Monday, we tested the major level of monthly support, had a negative candle. Tuesday, Wednesday, you may, if you had done your analysis and started to maybe work out that on the monthly chart, there's the potential of a right shoulder area here. This is where price could stop for the right shoulder. Then you could have been looking to sell on a retest of 137.92, stop 100 pips above. All right. If you've done that, you've already seen 100 pips. You could be at break even by now, risk-free. All right. Waiting to see if the positional play is going to work for you. Okay. Now, of course, if you didn't do that, as I just said here, you could be trying to trade at 137.15, 100 pips stop above, looking to see if that is now going to hold the market for the move down. And even if this major pattern doesn't, this major pattern could unfold and we could see a move all the way down to the 127 extension of that big fib. But even if it only pulls back to weekly support, weekly support's down here at 132.23. If you did trade the 100 pip entry, even today at 137.15, I think the number is, there's 500 pips approximately to that level, to the first weekly level of support. So that's risk to reward of 1 to 5 potentially. If price gets there, you would have a risk to reward of 1 to 5. All right. So you just need to make your mind up. If you want to trade that pair, price might come. We've got Canadian news coming out later, 10:30 p.m. GDP from memory. Price might pop back up. Maybe the news is fractionally Canadian negative, US dollar strength. Maybe it pops up a little bit later in the day, offers you that further opportunity to sell at 137.15. Or maybe it doesn't. You just have to watch. All right, dollar yen. It's not doing much. 144.99, this daily resistance level up here. Longer term trend on the weekly and the monthly is up. Had a bit of currency manipulation last week from the Bank of Japan. Didn't really set the world on fire though, in terms of a major reversal. It did move down like 500 pips from memory, but you can see that there's the day, but we're just coming back up. Slowly but surely, are we going to take out 144.99? So all the other yen pairs that have been selling off are starting to move back up. So maybe we will move back above. Alif may ask me, dollar CAD, what time frame do we have the head and shoulder pattern? And go to your monthly charts. I'll quickly go back to it again. Monthly charts, that's where I'm getting the pattern from. It's going to take a while before we have confirmation the pattern's really there, but potentially we could have that pattern just there. All right. All right, back to the dollar yen. So are we going to move through 144.99? If we get a clear break above there, then I would, maybe you can start to look to want to trade the dollar yen. At the moment, it's still questionable about what's happening in the area. Is it holding there to move down? Is it just consolidating? Now, what we're having at the moment is what we call a bit of a risk-on environment from yesterday. So what can often happen is like Aussie US dollar moves up and the Aussie yen moves up. And what will happen with the dollar yen is it'll go sideways. All right. So that's what we're seeing at the moment is, like euro dollar moving up, euro yen moving up, then dollar yen will be sideways. So we might just see a period of time here where the dollar yen just is in some form of consolidation if we get this risk on environment where currencies to the US, currencies to the yen, except for the dollar yen, are simply moving up because it's risk on. Stock markets maybe are going to have a strong rally We'll see whether it can follow through today. That's risk on. So pairs like the Aussie dollar will move up, New Zealand dollar will move up, Aussie yen, New Zealand yen, potentially Euro yen and Euro dollar. And dollar yen will often be sideways when we're seeing that strength of those instruments. Slav is saying, do we need to expect any more manipulation for the bodge? Well, there's always that question in mind. You're saying it's a waste of money for them? Well, potentially, but not really the bodge's money, is it? It's the taxpayers' money, potentially. So often, yes, currency manipulation by the central bank can be a futile expedition. I mean, that's what the Bank of UK is doing right now with their buying of bonds. It's trying to manipulate the price of their currency now. But obviously they're spending money, taxpayers' money to do it. And sometimes it is a futile event. So it might mean that we get a rally for a while on the pound to the US dollar. We might get a decline on the dollar yen for a while, but ultimately, you know, on the dollar yen side, with interest rates rising on the US side, they're going to raise obviously probably next month again. I think I saw a headline today that they won't meet their interest rate expectation level in the US till next March. So we're not really expecting the Bank of Japan to raise interest rates. So all we're going to have is higher interest rates on the US side, no interest rate on the yen side. So trying to fight that battle of the dollar moving up against the yen seems, you know, stupid, but we could just consolidate and slowly grind up ever so slowly. But the key level in the sun at the moment is 144.99, the 145 level. That's obviously where the Bank of Japan doesn't like it to be at the moment. So you're saying to me, so yen will be collapsing without further intervention, the dollar yen will probably move up because the interest rates of the US are going to get better. So it opens up the carry trade where they borrow yen at next to no interest and then turn it into US dollars. Once you've turned it into US dollars, you can get interest on it. So that's why it's called the carry trade. So you can borrow pretty much at zero, turn it into another currency where you receive interest. So the interest rate differential there to the dollar to the yen isn't going to change. It's going to increase over the next few months. So like you say, like pouring water on the sand, exactly. So potentially, yes, this could move higher. But of course, there's always that possible intervention. All right, let's have a look at gold before we finish up. Like the currencies, this is a day chart. We've obviously had a positive day. It is managing just to hold here at, you know, structurally, one day up doesn't change the structure on the day charts of the currency pairs that have been moving down. Doesn't change the structure here on gold. We're actually holding below day support there at the moment. You know, it's going to be over the next few days. Does the 1 day rally of yesterday start to move forward into 2, 3, 4 days of moving up? Do we start to see on, this is obviously maybe the interim low now, and it's the interim low on a lot of instruments. Do we see a higher bottom form over the next week? All right. So I'm not getting too bullish. I'm not like opening up multiple positions. I'm potentially looking to go long on the Aussie yen. I can see an entry that I like. I'd like it to break 94 and be above 94. And can it pull back to 94? Put that in the Telegram today, but isn't doing that yet. But I'm not going to start to load the boat and open up multiple bullish positions at the moment until I start to see that it looks like it could, you know, unfold for 2 or 3 weeks. All right, because, you know, gold could be back down to the low of yesterday. So I'm not seeing there anything to do to the upside. You know, if that closes below 1654 today, really 1654, is resistance for a move down. All right, I know the 4-hour chart there's just putting a slightly bullish structure, but if we, have an attempt to move up through here today, and by the end of the day, we're back below, it's just another opportunity to sell, probably at resistance to move down. All right, so I think the big overriding factor, just to finish up, will be what the US market does tonight. Does this 1-day false break reversal candle at monthly support here continue to another bullish day? All right, I did note on the Dow Jones that we're in a very strong area of support here. We're trying to get below this top here. We moved above the top, we put in support low here. There's a support low there that we formed more recently that we moved below. So we're fractioning below this area, but yesterday on the daily, we actually closed back above it. We're back below it at the moment. But the strongest part of the market, when the stock market is open and trading, doesn't happen until when we get to New York. So that being below there is just off-market trading, quiet trading for the Dow at the moment until the full stock market opens. So what does the full stock market do during the day? All right, so if you're watching the stock markets, if they start to be another bullish day, we're going to see more upside potential on the pairs to the US dollar and the pairs to the yen. More of a corrective move back up. All right, so still a big question. Is it a one day wonder, or can we continue the correction? I think, like I've been saying, prime example would be the Aussie dollar. Go to on the charts. I've been saying this for a number of weeks, but it's been keep moving down. There's the weekly structure with the fib. All right. We haven't quite got down to the 162, but normally on a weekly move with the fib tool, we get down to about the 127 extension, and then we put the corrective rally in. All right. So we are overextended. We could well be putting in the bottom there. And this stands true for all the pairs that have been in their downtrends on the weekly charts, putting in potential bottom at the 127 extension or 162 extension of the range. Potentially this could be the low now for a corrective move up. All right. Of course, we've just had 1 day at the moment. So, but if we start to have 3 days up and we can put a higher bottom in on these pairs, then potentially we're going to have that corrective phase back up. Like this corrective phase here before, maybe another sell-off. All right. All right, so that's what's seeing in the market at the moment. Lots of the pairs on the 15-minute charts in any event. Let's just go back to them before I go. We're seeing this support moving back above the central pivot on all these pairs at the moment. All right. Aussie's back above. Just retested the central pivot point there. Euro yen, look, it's taken out your high yesterday. Whilst I really don't like the euro dollar in its position with those weekly levels of possible resistance, it's moving into the area at the moment. Pound dollar. Can't take out yesterday's high yet, so that is the concerning area up at 109 to 109.16. So if you did get into a trade to the upside, you should be at break even, hopefully. All right. Who's in dollars doing the same thing. So we're definitely seeing intraday a much more bullish price action being above the central pivot point. So again, tomorrow, as the day charts refresh and you're looking at where price is relative to the pivot points, ask yourself, are we again opening up into the new ascending session above the central pivot point? If we are, look at the central pivot point to be the support low for the low area for the day for another day up. Now, of course, if we can't hold the central pivot point move below, then, you know, be cautious. But if you keep seeing the days getting support at central pivot point, it lends price action to having another day up. All right. All right, just give you a heads up what's coming up next week. Next Tuesday, our webinars will be starting at 8 p.m. New South Wales time next week. Forex trading live market analysis. Next Wednesday, I'm going to be reviewing price action from last month, patterns that may have been forming. Not if too many patterns formed last month. It was more pure structure, understanding what the higher time frame trend is, looking at where you could execute short trades to the downside, generally speaking, at structure. All right, so the more that you can get good at looking at structure, it's always good to review, you know, at the start of a new month, review the price action of last month. Is that going to tell you anything about what might be happening in the new month? And as well, looking at what structure did form, and if you did see that structure forming at the time and we were able to trade it, or if you couldn't, can reviewing that help your hindsight becoming foresight as you keep trading from one month to the next? Do you start to see things happening every month? And then before you know it, you go, that same thing happened last month and this occurred. So I'm going to trade like it occurred last month. And as long as you're managing your risk and you're starting to get the structure right, you're going to start to see profitability. Slide saying daylight saving starts next week in New South Wales. Yeah, that's what I'm just saying. So with the New South Wales change of daylight saving, I'm in Queensland, so I do the webinars at 7 p.m. throughout the year. Whereas New South Wales moves to 8 o'clock. If I did 7 p.m. New South Wales time at 6 o'clock for me, and it doesn't work for me and my household. So we just stay at 7 p.m. Queensland time, which means it's going to be 8 p.m. New South Wales time. And of course, some other states in Queensland move, I think, as well. So just be aware of where you are relative to Queensland time or New South Wales time. If you're in Queensland, it doesn't change. If you're in New South Wales, webinars move forward an hour to 8 o'clock. And I'm not sure what else happens in other states, so you'll just have to work it out. And wherever you are in the world, if you're in the UK, for example, if your times aren't changing, nothing's changing. Okay. It's still at the same time in your time zone. All right. So in terms of, not to make it any more complicated, but if you look at Greenwich Mean Time and the time wherever you are, the time isn't actually changing at all relative to GMT. It's just exactly the same time. All right. It's only changing if you're changing your times. All right, everybody. So if you want to come and see me next week, just come to the website, register your interest. If you're on our YouTube channel, I couldn't see your chat, but thanks very much for listening in. You're more than welcome to register for the webinars and join us. Other than that, everybody, still be cautious of the market. Don't get too bullish just yet. Let's see a little bit more of a confirmation, because it could just be a one-day wonder, and we could be going all the way back down next week once more. So Slav, thanks. Have a great week, everybody. Great weekend, everybody. If you're in Queensland, it's getting a little bit summery and sunny here, so enjoy the sun. Other than that, stay safe, enjoy the weekend. Look forward